Understanding non-sufficient funds, NSF, and their implications. Non-sufficient funds, NSF, commonly referred to as insufficient funds, is an important financial term that consumers need to understand. This article will delve into the concept of NSF, how it works, and strategies for avoiding NSF fees. What are non-sufficient funds, NSF? Non-sufficient funds, NSF, refer to a situation where a checking account lacks adequate funds to cover transactions. This status triggers not only a warning on bank statements but also leads to additional charges when a transaction cannot be completed. Essentially, if a customer attempts to withdraw more money than they have in their account, the transaction will fail, and they will receive a notification of non-sufficient funds. NSF fees explained. When a check is presented for payment, but the account does not have enough funds to cover it, the check is said to have bounced. In such cases, the bank has the option to refuse payment and charge the account holder an NSF fee. As of 2022, these NSF fees averaged around $34, according to the Consumer Financial Protection Bureau, CFPB. In addition to bank fees, merchants may also impose penalties for bounced checks. The importance of NSF awareness. Understanding NSF status is crucial for maintaining good financial health. A check will be marked insufficient if the funds are not available 2 business days after it is deposited. Customers should be vigilant about their account balances to avoid the nuisance and financial strain that NSF fees can cause. How NSF fees work. Bank policies and procedures. When a check is written and subsequently deposited, banks are required to make those funds available within 2 business days. If there are insufficient funds in the payer's account, the bank must refuse payment, resulting in an NSF fee. This process is a critical part of managing finances and emphasizes the need for accurate budgeting. In light of concerns regarding consumers being charged multiple NSF fees for the same transaction, the CFPB has reported financial institutions taking steps to ensure fee transparency and fairness. Numerous banks and credit unions are now re-evaluating their policies regarding NSF fees to provide more protection for consumers. NSF fees versus overdraft fees. Non-sufficient funds and overdrafts are frequently confused, but they represent distinct financial events. NSF fees, charge applied when a transaction cannot be completed because there are insufficient funds in the checking account. The bank does not complete the transaction, resulting in a charge to the account holder for a declined payment. Overdraft fees, these are charged when a bank pays a transaction that exceeds the available balance, leaving the customer with a negative balance. When customers have opted into overdraft protection, the bank allows the transaction to go through but charges an overdraft fee. An example for clarity. Imagine a customer has $100 in their checking account and attempts to make a $120 payment. If the bank declines the payment due to insufficient funds, the customer incurs an NSF fee. Alternatively, if the bank allows the transaction to go through, the account balance will drop to -$20, incurring an overdraft fee. How to avoid NSF fees. Consumers can take several simple measures to avoid incurring NSF fees. 1. Maintain a budget. Proper budgeting can help prevent writing checks or making payments that exceed the account balance. 2. Monitor account activities. Regularly checking account balances and monitoring transactions provide insights into spending habits. 3. Link backup accounts. By linking a savings account or a credit card, consumers can ensure that they have additional funds to cover shortfalls automatically. 4. Set up alerts. Many banks now offer low balance alerts, notifying customers via text or email when their account balance drops below a certain threshold. 5. Consider overdraft lines of credit. Overdraft lines of credit can serve as a safety net, allowing customers to cover transactions that exceed their balance. Criticism of NSF fees. The CFPB oversees consumer financial protection and has raised alarms over the policy surrounding NSF fees. In many cases, banks have been accused of reordering transactions in a way that maximizes overdraft fees, an unethical practice with substantial financial implications for consumers. Notable class action settlements have occurred, with institutions like Bank of America and TD Bank paying large sums to rectify grievances related to insufficient fund claims. Increasingly, financial institutions are reconsidering their NSF fee structures, driven by public outcry and regulatory scrutiny. Frequently asked questions. Why do banks charge NSF fees? Banks impose NSF fees to cover the costs associated with processing declined transactions. These fees have become a significant source of revenue for many banks. Are NSF fees legal? Yes, NSF fees are legal, but they must be disclosed to consumers. Can an NSF fee be waived? Bank policies differ, but it's often possible to have an NSF fee waived, particularly for first-time occurrences. Do NSF fees affect your credit? While NSF fees themselves do not directly impact credit scores, a bounced check may delay important payments, potentially affecting credit profiles. What happens if I don't pay my NSF fees? Consumers are generally required to pay NSF fees, which are automatically deducted from their account. The bottom line: managing non-sufficient funds and understanding the associated fees is vital for financial health. While these fees can be frustrating, being proactive can mitigate their impact. Monitoring account balances, considering overdraft protection options, and understanding bank policies can all contribute to mitigating the risk of incurring NSF fees. As financial institutions continue to adapt to consumer complaints and regulatory input, consumers must stay informed and advocate for responsible banking practices.